This big old thing in the corner. Hmm. All right. Close all of this. Yo, mic check, mic. Can you hear me? Ba-ba-ba. All right. Okay, so I'm gonna go over this analysis again. I kind of just did it, um, but we're gonna do it again. So I'm gonna take everything off the chart, and I'm gonna break down kind of like this analysis here. So this is Nasdaq. Um, this is a micro Nasdaq contract right here. And then when I'm doing this, I'm gonna go over here to a weekly chart. Now, a weekly chart kind of shows me here that we had a big uptrend here. Buyers were in control. We had a correction. We broke the high. Now, when you break the high, this was the last low that was made in that break of the high. So, as a trader, what you want to do is mark that low. Okay, that's going to be important because the buyers were in control, and this is the lowest price they were willing to give up. And then they came up again, and they kind of failed to continue that uptrend, and then they broke below this last so-called controlling low. Now, we didn't get a close above that on the weekly, but on the daily, um, we did get a close above that on that daily chart, and that kind of makes that a significant break. Now, next thing we want to do is go ahead and look at this break and see this trend. So now you can see that this is a downtrend because we're making lower lows and then lower lows, and then we're also making lower highs coming down like that, right? So now what you want to do at this point is we're looking for where the supply and demand became out of balance. Okay, so once again, here we have another break of these lows, which resulted in the break of that, that weekly low. Now, so in this area here, you can see that consolidation before that break. So we're looking right in that area right there for that supply to be in this area before that break of that low. Now, we can go in smaller time frames and break this down even more and get more specific, but that's not what I'm looking to do right now. Now I'm looking to see where might the price just go back up again, right? So this is an area where the structure is correct, but the context is not. So we have to go lower down here where I was trading before. Um, Now we go in this area. This was my last long that we had down in here. So let's kind of do the same thing. So we were traveling up, buyers in control, pull back here. I'm just gonna get rid of some of this stuff here. This is from old trades. Okay, so here we have buyers. Once again, buyers are in control. So you can see here buyers, 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 buyers. Okay, we can see buyers all the way up there. Now, when we get here, we have a correction in this area. Now, that's a little higher than I want. I would even rather want to get down here somewhere. And that's probably where the market may want to go, which means if the market wants to come all the way down here, we're going to have a pretty critical uh, crash. The markets were just down here July 6th, a couple weeks ago, before we had this, you know, well, no, the market hasn't been down here since April. Okay. So market's been down here like in April. So we haven't been down here for a really long time. But we got a lot of fresh demand down in this area, which makes me think that we could have a significant drop, especially if we don't have good demand. Because even this area right here, I would not say that I would just blindly just go long in this area. Definitely need some confirmation to even take this trade here. The real buy orders are going to be below this 26, 410 area to find good buyers. So right now, I'm not even going to really look. I just know that this is the area, right? So it's no need in going in here and finding the zone because you're never just going to straight buy this. You're going to have to wait for the trend to change back up again before you buy it. So right now, the focus is looking for supply on the way down. That's the main focus right now on Nasdaq. So now, when you break that down to an hourly chart now, okay, and we look at yesterday's price action. Yesterday, we kind of dropped down, made a low, came up, made a high. That's the highest we could get yesterday, and then we fell off again, right? Overnight. So this was the highest from yesterday. So the play to go for today would probably be playing off of yesterday's highs. That's the highest point we can get to pretty much yesterday. Now, if you want to go for people's stop outs, of course, we can look for orders in this drop on lower time frames. On the 15, I don't see anything. On the 5, yes, a couple things here on the 5. So on a 5 minute, you get a little bit above that. I'm looking to run some stops. But you're not running stops. You're just thinking of the bank, maybe run some stops. Yeah. All right. So that's the play right there. All right. Now, plan is on a micro contract. Selling one there. I mean, so the risk on that is like $220, of risk to take on that trade. Now you could always go closer to your stop with a lower probability of getting in a trade. So let's say you wanted to risk $100, you could do that. Pull that entry up a little bit. So that's how you would reduce risk in a situation where you have a trade, you have your zone. Always get closer to the stop loss to reduce risk. Then, me personally, I always want to get about 3 times whatever I'm risking on the trade. So, that would be a decent, a decent play right there. Okay, 100 to make 500. Reward to risk ratio is good on that. Okay, but like I said, the only thing about that trade is kind of breaking those highs a little bit. That's more of a I want to catch a fake out. Um, to take the trade straight up would be more like that, coming up here to those highs right there. Okay. All right, so that's the trade setup on the Nasdaq. Let's see. All right, you in here, Trey? How do I? Hmm, let's see something. I don't even see the chart. Hmm, I must have did something to not have the chat pop up. Right, the settings wrong. So, Yeah, I had a chat time. Okay. Um, let's see. Okay. All right. Well, that's crazy. I'm glad I'm testing this because I don't really know how it works. It says you're in here, but I don't see a chat or anything. No, no, no. I was just saying. I don't see a chat or anything inside of here, so you can't really communicate. So I gotta figure that one out. All right, I'm gonna go back. I'm gonna go to another setup here. All right, so that's the Nasdaq setup. Um, Now as far as going long on Nasdaq, let's see. Oh, all right, you type something in there. Let's see. Triple. So I don't see nothing on the chart. Stop showing for a second. Yeah, I don't know what's over the chat. All right, let's get back to Nasdaq. All right, Nasdaq. That play is done for low, high, higher, low, break to a higher high. I mean the long is here, but it's so counter trend that um, it doesn't make it very attractive to go counter trend like this. It kind of already worked one time, so I mean you had the low, high, higher, low, break to a higher high there, but you had to really break the low to catch that, which is not my favorite play. Um, but this is what a lot of traders will do right here. This counter trend move. Okay. Okay. All right. So let's keep going. So now another thing that we can look at is XLK. So XLK, that's a technology ETF. Now notice it's not going to be like futures where it has a lot of trade volume. So we're going to have to use like higher time frames on here. Okay. Now on this one, what's my date? Mexican exchange. I must chose the wrong one. I don't want to be on Mexican exchange. All right, there we go. All right, so here we go. So XLK, you can see it looks just like the Nasdaq, but this is trading it like a stock. So if I'm, if you want to do an options trade or something like that, you can always use XLK. If you don't want to use the Qs, QQQ is going to be the one that's exactly like, but this is specifically the technology sector of the S&P 500, right? The spider ETF. So you can see that it's kind of struggling here. Now it is this little area right here, it's a little pocket of demand right here where it is, some hope. So that at that it's right at that drop base rally that we're at right now. But like I said, we broke the lows, so it's kind of like we're opening up gap down below all of this. So I mean, longs are in trouble right now, basically. So we could drop easily down to this 135 area. So today, all right. So this is kind of like what I'm looking at today. Today, maybe kind of like, hey, let's protect our portfolio. Let's be smart. We got a gap down right here. Um, Now, so with that gap down, if we break this low, then we have this gap of supply right up in here. So just imagine gap down, we break below that low. Sellers are still going to be sitting up here waiting, right, to dump this down based upon this chart. Could I be wrong? Sure, right? So that's why you want to have your stop loss up there. So, right up in here is a great place. Uh, so these will be long puts up here because a long put. Right. So now why? Because it's such a huge range. You can just see this overwhelming bearish pressure here. Now, this also could be an easily be a correction, right? You could argue like, well, we're in the corrective phase of an uptrend, and I can easily agree with that. I can see that. So now, when you look at something like that, you're like, okay, well, what's the reverse side? See, and that's the thing about trading. You gotta think, how would you shift? You don't get stuck on the just on the short side. You're like, all right, well, what happens if the environment changes, right? What happens if the bulls do come in? So now we have to make a determination of when that when that point is. So let's go ahead with our trend line, and if you can see, you can just see that angle at which the market's dropping, right? So you can see that we're touching these highs, and we're just kind of coming down. Now I can even do an inside trend, and this is a more simple version, just trying to get you to be able to see that, right? All right. So now, if I said, all right, if price starts to break above this and break above these highs and break my trend line, come up, break that trend line, then I'm like, oh, okay, maybe bulls are starting to take over this thing, and I can reconsider. That's why this area is going to be just a difficult area to trade. When markets are trending, it's a lot easier. But right now we got like this choppy. That's why I'm saying let's just stick with the downtrend. Um, it's just a little easier. Just stick with the trend, right? So let's just go here. All right, so that's the open right there. All right, so we're just gonna come here, and we're just gonna look at this general area right here, okay? And you can see there's a tremendous amount of trading in that area. Um, the best thing as a trader is to find areas where there's not a lot of trading. Okay. And that tends to be where the imbalances are, where there's not a lot of trade action. The highest activity is in the middle. So let's see. And so we look at this, where's the highest activity, right? So highest activity is in this area. So now you think about it, you're like, oh, okay, gap down, causing the imbalance. Price comes back up, orders there, drops down, comes back, orders there, right? So this middle part is just going to be that. Could you try to do trades and do things in this area? Yeah, but that's where you need proof of the buyers or sellers, in that general area first. Okay, before we start going long again, because right now we have that bearish pressure, right? So now, even though the left side of the chart, you can see these patterns where you have demand, you're still going against the right side of the chart, which is what's happening right now. So make sure you pay attention to what's happening right now to override what's happening over on the left side of the chart. It's a big mistake that people make. Okay, now let's look at some of the take a look at this here. So take a look at fingers. Okay, so we can see we got Nvidia down, we got AMD down 5%, we got Nvidia down 1%, Apple down 2%. So that's that whole red tech. Okay. Marvel. We come over and see we're just dropping down. So we go back to NQ. Okay. You can see that that's gonna hammer on Nasdaq as well. Now we do have this little bottom area right here where we you know, if you're gonna go long, then this is gonna be the area where you're gonna go totally counter trend against the bot to go long. Okay, so we're getting a little reaction off of that, but like I said, it's totally counter trend taking that trade. Okay, so maybe getting a move mm, up to here. All right. Yeah. Now, once again, you always want to make sure to do a risk measurement on these too before you pop a trade off. So that's 75 to 245 on that. Now to this is the overnight level. So we got it's nothing from yesterday during the regular session that traded that low, or the day before. So that's the lowest we've been in a minute. All right, let's look at ES. Okay, so ES looks about the same. So looks about the same, but like I said, that this move up didn't really do much. Um, so that would be the whole problem there, right? Is it's just not a strong, it's just not a strong move coming off of this. So price making it back down into this area would be reasonable. And then the setup looks pretty much the same as NASDAQ. There we go. Okay. All right, so let's look at NVIDIA. Now, once we do our analysis there, now you can notice, now you're starting to notice the same pattern, right? Because we're in the tech stocks. So now you're going to start noticing, now that we looked at NASDAQ, we looked at XLK, when you come and look at these stocks, now it gives you a better vision of what's going on with those as well. So, like for NVIDIA, you know, down here, this 185, okay, you can see that imbalance. You know, you had a downtrend, but then this area killed that downtrend coming back up. So when you have your support and resistance traders, they always kind of look at these areas like that. So if you're a bank, then it's kind of like, all right, if I'm going to run these stops off of this low and off of that high, then bring it down, lower to a qualified area. Okay. So I'm not going to go into what a qualified area is in this video, but they're gonna bring it down to a qualified area of demand. So I like this 180 to 184.42 area to see what happens when price gets down into there, right? And then once again, we're gonna play that right side of the chart when price gets to these key areas. Now, could this be a key area? I mean, sure. Like I said, price did come up and do this, but it's not everything that I'm looking for there because once again, no close above these highs. It came up to the high, but did not close above it, right? The last time we closed above a high was here. Okay. So from here to here, we closed above a high. Perfect. Right. So, but then when price breaks that controlling low, now that takes us to that sideways market again. Okay. So that's why everything is kind of shifty right now. Um, Especially in the tech. So let's go and let's look at oil. Okay, so oil for the last 3 days kind of like just drop over the last 3 days. We did have like a nice little uptrend here. So let's kind of clean this chart up for a sec. And then, all right, now, so same process. Okay, we can easily see the downtrend. So high, low, lower high, break to a lower low, right? Continues to break down lower, right? So when you look at that, it's like, okay, the last thing we did was kind of like broke that low, but then it came back up. So your supply that brought this down is going to be right up in here. And we just tested that again. All right, boom. Just tested that right there. Boom. And then, so for demand, we can roll with that. Could actually give us a move up. But now, once again, you need that 5 minute to agree with what you want to do. Okay. It's decent. Um, it's a decent setup. A little late to the party. So it kind of already happened, here, boom, here, boom. All right. So when we look at this, we do have supply right there in our way. All right. Now let's measure. See how this can make sense. If the stop loss is back here, you only have a 1.36 to 1. Bringing the entry lower, 1.56 to 1. Now, this one's just bringing your stop loss inside of the controlling low. That gets you 4 to 1. The only problem I have with that one is I can't, you know, I can't get my stop loss below here. Um, but the risk is fairly low. You got about a $30 risk per contract to make $127. So, I mean, playing off of this trend right here after a big drop makes this not bad of a trade. Okay. So, um, and then of course, when price gets right up in here, you could always consider moving a stop loss or, and seeing maybe you can pop more profits. Now, once again, the reason why this trade even exists is because of this bigger uptrend, thinking that this is the correction and playing off of this move. Okay. Not in the best location in the world, but yeah. Now, if we could get this profit here, even better. You know, that would be maybe two contracts as well. Um, Looking to get up into that area, yeah, which is definitely cool. Uh, it's there. You know. Okay, so that's a couple trade setups. Just kind of showing you guys how I analyze the markets. Not really looking at the news. Just kind of looking at the charts, understanding the patterns, understanding the context. If you're interested in learning how to read charts, how to understand what I'm talking about, and how to do the same thing, just let me know. Hit me up. I'll see where you at in your knowledge right now. Just send me a DM saying that you want the skill gap workbook, and I can send out the skill gap workbook to see where you are in your training right now. Even if you're a beginner, it's fine. Just let me know, and I can work with you to help you understand what these charts are saying. All right, go. I'm gonna get out of here, and it's good hanging out and make more videos like this. It's pretty fun. Peace.